Well, good afternoon, everybody, and welcome to our webinar here on affordability and housing. We have got an action-packed hour assembled for you, and we're looking forward to a great time. Hi, I'm Rod Schillhauser, Director of Marketing here at SVN Rock Advisors, and excited to have two people with us. I'm going to have them introduce themselves, and why don't we start with you, Dave?
Hi there. My name is Dave Steemack. I'm the president of the Ironstone Building Company, and also the original thought leader, I guess, of the Flex House, which we're going to be speaking to you today about. So thank you for putting this on for us today, Rob.
Hey, pleasure. And Mr. Joe Dubas, how about you?
Great. Good afternoon, everyone. Thanks for having me, Rod and Dave. My name is Joe DeBoos. I'm a senior mortgage specialist with RBC. 34 years in the financial services industry with RBC. So happy to be part of this relationship that we have with Ironstone. Looking forward to the presentation.
Yeah, absolutely. You know what? And I don't know if this has ever been done before. I know certainly the topic hasn't been done before because this is brand spanking new. And you know what? We're going to be really excited about. Let's do some housekeeping though, just so everybody's aware. We're here in Zoom webinar mode, and we're not going to have a live Q&A session or anything like that. But we are definitely going to connect you with all of our speakers. You can take a picture of this because this has a QR code that will take you to a place where you can reach out to Dave, myself, Joe. We'll show this again at the end too. So if you missed out on it, we'll definitely make it available to you. But we know that financing houses and personal purchases, things like that, is kind of a personal topic. So one-on-one probably is best for the lion's share of those types of questions. And often we're asked, hey, if I was 5 minutes late or I got to leave 5 minutes earlier, do you have a recording of it? Yes. At the landing page where you registered, and we'll do a follow-up email to all of our attendees as well. We will post and give you access to this live recording via YouTube. And that way you can revisit it. You can chime in, look in, and question and get in touch with any of the speakers. Now, before we dive into the actual solution, which I know is going to be a big part of what you take away today, I just want to spend a couple of minutes just talking about what I think we all already know and are already experiencing. And that is, we know we're involved and we're right in the middle of some sort of housing crisis. We've seen the buzzword, we've seen it in the media, but I want to just kind of simplify the discussion down to two key elements. The first element is affordability. Now, affordability, we know where it is today. It's certainly not where it was when I bought my first house. So affordability is a huge part of a housing crisis. But also rents are a big part of it as well. And I don't think a lot of people equate the two together, which is why I want to take the time just to let you know these are probably number one and number two key components to the housing crisis that we are all experiencing here in Canada. So when you look at affordability, now I'm not going to go in and give you the numbers because I think it's pretty much common sense. We know that the gap between incomes and the house prices just keeps on getting wider and wider. My kids laugh at me because I tell them, when I first bought my house, it was only 2 or 3 times my income. And my son turns around, buys a house, and it's 10 or 15 times income. And I think logically we know, housing prices are not going to come down to make up that difference. And certainly salaries and incomes are not going to go up to make up that difference that we experience. So something else has to also happen. But also, there's also some media out there as well talking about how this year, you see in the bottom right hand corner there, this year housing prices are expected to fall. Fall relative to what? Relative to maybe high prices last year, the impact of interest rates, et cetera. But the bottom line is, in terms of my personal opinion, is that putting faith in somebody else's prognostication or things outside of your own control may not be the best strategy to solve personal challenges when it comes to home ownership and things like that. So housing prices might be coming down, but again, it's not going to correct the problem or perhaps solve the problem for potential home buyers. And the same thing with rents. Here we are, we live in a country that is very centric on immigration and always will be because we need that for our economy. We've got a large landmass, a relative low population. And also, I know that the younger generations have lost that dream of home ownership because of lack of affordability. So guess what they're doing? They're going to rent as well. So the pressures of them renting, immigration, and higher immigration today puts a lot of pressure on rents. And our supply of rental units here in not only just our GTA area where we happen to be located here or our province, but in general in our country, there is not a lot of excess supply of rental space. And guess what? When you got a huge demand and low supply, we see the results. We start to see astronomical rent rates that rival, in most cases, supersede mortgage payments, and so again, rents is a huge part of the crisis that we're facing. So I want to just tell you a little story because a couple of years ago, Derek Lobo and myself, we got together and we were just thinking about this housing crisis. How do we solve it? Do we build more apartment buildings? Yes. Do we need more housing? Yes. How do we get the prices down? We don't know. So we thought, the self-funding house. We wrote this book really for our children. And much like that story about 2 or 3 times my income and not the same deal for our kids today was really the point and the way and the reason why we wrote this book. And so when you think about affordability, the book answers this fundamental question. How do you afford a house in today's market? And the answer that the book provides is you treat your home as a business by becoming a landlord. Now, we'll explore this obviously in this webinar, but this was the key component because different thinking is needed. If housing prices are never going to come down and incomes are never going to go up to where house purchasing is 2 or 3 times your income, something has to change. And the only thing that can change is our mindset. So there's the first question. The second question is, for this housing crisis, how do we create affordable rental housing supply quickly? Because timing is of the essence, right? And the answer is by adding basement apartments, ADUs, accessory dwelling units to houses. That is the fast solution. And really, that's a lot to do with the premise that we're going to talk about today. So let me just give you this before we dive in. House purchasing, you can buy a house and you can live in it. We all know that. You know the price. You know what that means financially. But what if you could think differently with what we just talked about, which is buy a house that has a basement apartment, or you put a basement apartment in, and now you have rental income coming in. That obviously is going to change your personal financial situation. We'll explore this in detail. What about the savvy business owner? Maybe it's a young person, maybe it's a young couple who realizes, hey, if I do that same thing, but I live downstairs, rent the upstairs for a significantly larger number, and further enhance my equity and financial position. That too is very, very possible. And lastly, some of you here joining us today may be thinking this of a pure investment perspective, or maybe get your own house and down the road creating wealth through real estate and so forth. All of these we will talk about, but this is how the mindset needs to change, we believe, with the self-funding house concept. Now, before we proceed, I just want to just drop, and we're going to put up a quick little poll here because we want to know from you, all of our attendees here, which of those 4 options appeals to you the most. Just go ahead and click on this. It doesn't store the people's names or anything. This is just a tally thing where it just tallies up the numbers that we go. We'll let this run for 10 or 15 seconds just to get an idea, because maybe what you saw changes your mindset. Maybe you just thought, oh, maybe the second option I might entertain, but all of a sudden, hey, I never thought of option number 3. I never thought of option number 4. But you start to see this. So the investor, the renting out the basement apartment seems to be dominating. Let's just close up the poll there. But that just gives you a good idea that, some people are looking to invest. That's a good thing, because that tells me that people are thinking beyond themselves. They're thinking long term. They're thinking big picture. So David and Joe, that's some good feedback to have from everybody. So let's get back on track here. So the self-funding house is, a concept that we took beyond the book. In fact, we went one step further and we actually created a series of books. And, book number 1 launched, did well on Amazon. That's the mindset piece. But book number 2 is actually launching in another week or 2. It's going to be live. That's the how-to book. How do you get a house, buy a house, new construction, renovation? How do you do that? And book number 3, we're conceiving. That's all about all the other parties that support the purchase. But I also want to just point out that here at the middle, you see those computers. That is an online learning portal. Because for you, the people that are watching this webinar, it's much more than just a book. You're going to have tons of questions like, how do I organize my finances? I'm afraid of being a business owner. I've never been a business owner. What about this tenant landlord thing? All I hear, horror stories on the news. Is it really that bad? So what we've done is we've assembled all sorts of industry experts to answer, guide you through, and provide you tools that will help you digest and work through what you're about to see here today. This is where you will find that. So for me to wrap up here, I just want to bring the crisis, bring all these elements together and let you know what the lay of the land is. So, our apartments still needed. Small, medium, large, absolutely. In fact, SVN Rock Advisors, I'm the director of marketing of that company. We are in that industry. That is what we do. And they are still needed, but it's a slow process. Apartment buildings are measured in years when they get developed, right? And that's not exactly a timely solution, but still necessary. We still do need that. The self-funding house concept is all about addressing affordability by adding rental income to the purchaser's pockets to help them towards mortgage qualification. And that's why we have RBC and Joe here, because they're going to tell you about that. And secondly, the rent rates of those basement apartments, or whether you live in the bottom rent upstairs, are substantially lower than typical market rents. So we're bringing affordable rents. And so for me, this is the answer to the crisis. Not the only answer. It is an answer. We still need a multitude of other things to address it, but this is something that we believe can be done very quickly. In fact, today's all about showing you the pilot project in motion and the Flex House, the actual solution that a developer here in the province of Ontario is already succeeding with, and in a short period of time. This is truly exciting. So that's my quick introduction. The rest of this webinar now, just to show you what we're going to do, we're going to talk about buying a house. We are going to walk you through the Ironstone Flex House, what it is, show you exactly what is available here, now, and today, as well as something totally different in terms of, hey, this stuff's all new to me. How do I get confidence in it? Well, we're going to show you a unique buying experience that walks you through this entire process. We'll also tap into Dave's and Joe's insight and expertise on the housing market that will help. I think we'll talk about a few questions I think is on a lot of people's minds and help you with that. And lastly, we'll land on some next steps, things, actionable advice that you can take so you can go figure this out for yourself and find out how this can be matched into your personal lifestyle. Now, before I turn things on over here, let's just ask one last quick little question here. When are you looking to buy a house? No, are you looking in terms of timing? And we're just going to put up this poll here. And again, we're not storing who's answering this or what it is, but we just want to get a sense of the people that are here on the webinar, whether we've got a wide variety of people that are looking to act quickly sooner than later, or whether people just think it's part of a forward-looking plan. And I think that's what we see here. We see a pretty good balance. There is some urgency. There's some people that are looking for as soon as possible. That tells me that, if there was the right answer for them today, they would be all over it. Some people are being realistic, thinking that, hey, maybe in this next couple of quarters, maybe the latter part of this year, maybe you're just in the stage of life where you're thinking it's further down the road, good information to have, or maybe even long-term investment. That all makes good sense. And so that all makes sense, very well balanced. So that's good to know. Let's close up that poll. And it's great feedback to have all of that information. All right, so let's get going. Fasten your seatbelts. We're going to dive right in. And you know what? The best place to start when we start talking about affordability and housing, it's about talking about the process of buying a house. And Joe, maybe you can just quickly walk through for our audience what, these 4 typical stages of the home buying thought process, and just share some insight for us, please.
Yeah, for sure. So once again, good afternoon, folks. Happy to be on the call to chat a little bit about some different options that may be beneficial for you from an affordability perspective. So we as lenders, we speak to clients about, what are your goals and what are your dreams? And, the majority of the clients in today's economy really kind of want to get into the housing market. So we really kind of have to work with the client's current financial situation, determine kind of what their affordability is, help them with some of their cash flow discussions. I mean, that's what we do at RBC is very different. We really focus on helping a client achieve those goals, which is really your dream. And at that point, we then talk about what, some of the different options that they may have. And this presentation certainly is a fantastic option, because what it will do is, and we'll get into more detail, is there is additional rental unit that could be used towards kind of from an affordability perspective, which is the whole issue that we're dealing with right now in Canada. It's all about affordability. And then once we kind of go through the dream, the finance, the option stages, then it becomes, okay, so when is the appropriate time for you to buy? And that poll really indicates that there's quite a few people that want to buy within 0 to 6 months. They want to buy, within as soon as possible. So we really kind of want to get the client from A to B, and then B, move them down to the process to be able to buy. So it's kind of a process that we go through, Rod, and sometimes we stop at one of those stations and we kind of have to dig deep a little bit, kind of take a step back, really kind of understand what's important for the client. How do we get the client to where they want to go? And sometimes we have to bring someone in to help them and then move them down the chain so that we can actually say, here's something that you can do. Let's get you connected so you can get out there and start buying.
Yeah, well, that's great, Joe. And just so everybody knows, this is the framework that's going to guide us through the rest of this webinar. It's about the dream, the finances, the options, and buying. And you know what? I just want to just talk about that dream thing because I started off today by talking about how, a lot of that dream of, especially the younger generations, the dream of home ownership has evaporated. They've relegated that maybe purchasing is just not in their future just because of what we've seen happen over the last several years. And I would just say that I hope that by the time Joe and David are done here, is that you rekindle that dream because there are answers. There are answers that are working today that maybe you're just not aware of, and you're not aware of how it fits into your personal circumstances. That's my wish for you. I hope you come away from that. And let's just keep on with Joe's expertise here because a big piece of it, and I know a lot of the attendees here are all thinking about it's about the money. I don't have enough money. The house prices are up here. How the heck are you ever going to make that happen? So, my question to you, Joe, would be very simply, give some guidance to our audience about when and why they should be speaking to a mortgage provider, because it's not just a sign on the dotted line service. It's much more than that, isn't it?
Yeah, it is, Rod, because what we're finding, with all the rules that have come into place as far as the stress test and the qualifying rate, a client may have been qualified a year ago at a very different, dollar amount because the rates were significantly lower. Today, the rates are where we're at. So, really kind of starting from the infancy stages as far as, getting to know the client, understanding, what their financial picture looks like. And sometimes, our job is to kind of maneuver the client's expectations. So if a client says they want to buy X and, we say, well, you may want to be able to do that, but why don't we start figuring out what we can do with some of your personal debt? So it's not just about taking them right down the road to where they want to buy. It's more about, we want to put a client into a home where they're able to actually sustain the home affordability and be able to enjoy the other things that are important, whether it's, kids sports or going on vacation, whatever. So putting together a plan. And as I mentioned earlier, we've got a vast array of individuals that we work with at the bank. So those individuals can come in and help clients with a lot of budgeting. So we're hearing a lot of clients that are saying, I want to buy, but help me get there. So we walk them down that path. So starting out with a pre-approval really does allow the client that first step because they need to know what they can afford, because how do you know what you can afford something unless you've gone through the process? So I don't want a client to go out and look for a home that they can't afford, or vice versa, go and look for a home that maybe was lower than what they thought. We want them to find a home that's going to work for their budget.
Yeah, absolutely. And then just so everybody's aware, we're going to talk to Joe a little bit more as well, specifically about the relationship between RBC and Ironstone with their Flex House. So stay tuned. We got a lot more to come on that. So that's great. I mean, so basically the message here is the bank is your friend. They're going to help you. The goal is they want to help you get into a home too, because that's what their business is centered around. So their success is your success and vice versa. So very, very important to understand. So let's move forward and move into the options. The options are all about, what is out there. And, David, I want to kind of bring you into the picture here because, and then maybe start off with a story about how Ironstone took this self-funding house concept, made it your own, and literally delivered a solution to the marketplace.
Thank you, Rod. Good afternoon, everyone. I guess the whole thing started actually as some things do on a late evening where Derek Lobo was in London having a kind of an after hours meeting, just talking about the market and what's going on and opportunities. And my business partner Alan Drulo and myself were talking to Derek, and we also were very cognizant of two very important bills that came to fruition in the province, and one being Bill 108. Which was more homes, more choice. And the second one being Bill 23, which was more homes built faster. So we had a really great dialogue about this. And we also had inventory of homes that were ready to go. And we do like to try new things at Ironstone. We like to trailblaze new ideas, and some of them are successful and some of them maybe not as much. But we decided that we wanted to convert one of these dwellings with an ADU, and basically work out the bugs and go through the process. Because it was so new, we knew we were gonna forgo many challenges, which we did. But we knew that at the end of the day, if we could do this for a right budget, that this could be very successful. And that's what we've done. We created our first one. We had some challenges, but at the end of the day, we did sell our first one rather quickly. And since then have had a number sold, and we are building quite rapidly a number of new units.
Yeah. I remember David, even in our conversations that, I just want to kind of bookend this because I know that even though it was some challenges you went through, not only did you learn, but I think the municipality in London learned a lot about this. So when the new bills came down, here's Ironstone wanting to take advantage of and implement day one, whereas a lot of people are going like, what do we do with this bill? And so they learned, you learned, and now the end, I think the recipient of the advantage is going to be the home buyers because now there's a solution in place to take advantage of this.
100%. And actually there were a number of advantages that we've kind of discovered by going through this process, right? As people have asked us, what's the benefit or advantage of doing it new versus doing a retrofit? And everyone has a different situation, but we've kind of highlighted a couple of advantages, which I think are very important to highlight right now. And I think the first and foremost one for us is the home buyer can rest assured that we have all our permitting in place, the inspections were completed properly, that the units that we have provided are fire separated by legal definition, because accidents do happen, and you want to be, as a landlord or as a tenant in that unit, you want to rest assured that you're going to be safe. And that's one thing that by working with a home builder, you can rely on that knowledge. There's also a couple other things too, and I think Joe will probably pick up on a couple of these, but we feel that it costs a homeowner less money to do it up front during the construction process. I would tend to argue that a home builder, when we're building a new home, for us just to complete the lower level at the same time as the construction above or the house in its entirety, it is less expensive and quicker to build at that time. So we do think that also lends itself to the financing model. When you purchase a home, you basically get a mortgage for the entire home. Whereas if some people do it 5 years later or 3 years or 10 years, if they don't have the funds available at that point in time, they may have to find an alternative source of financing, which could cost more than just rolling it into your mortgage from the beginning. I have several others. I'm just going to really go on a high level. By working with a home builder, you have a warranty in place, and that is a great peace of mind to know that Terrion will step in the event that there is an issue that can't be resolved. So you have a peace of mind that you are building a home that is protected under the Ontario Home Warranty Program. And then I think the other one too is just the ease of construction. I think most people at some point in their lives have gone through a renovation, whether it was with their parents or themselves. Renovation process, you do have to have patience with construction workers basically walking back and forth through your property or through your home to get downstairs and making a mess and making a noise. By purchasing a home with the ADU already built into it, I think you've created yourself a very stress-free way of obtaining the additional dwelling unit. So I don't know if I said too much there, Rod, but I think that those were the key advantages, I think, of buying a home with an ADU at the construction time.
No, I think that lays the framework for what we're going to talk about exceptionally well, because knowing what had to be done and why it's being done. I mean, that whole Terrion warranty thing. I mean, you don't get a warranty other than the promissory warranty that you get if you have a contractor come in after the fact. And so it is a huge value, let alone the monetary value. So no, that's really good. But I do want to stick with you as well, Dave, because maybe I think what would be important as well is just from a credibility and security aspect. Tell us a little bit about Ironstone itself, because maybe some people here on the line have never heard of Ironstone. Maybe they don't live in London, but maybe London is a place that they have an interest in. So tell us a little bit about your company.
Thank you, Rod. Well, Ironstone is currently in our 14th year of building homes. In those 14 years, we're just basically surpassed building over 1,500 homes in the London area. Those basically entail single family townhomes and also mid-rise apartment buildings. My business partner, Alan Drulo, is the president of Drulo Holdings, and Drulo has a very strong recognition of being a premier landlord in definitely in Southern Ontario, with having an over excess of 10,000 apartment units in the province. So between our partnership, we feel that we have a pretty good experience level, as you were alluding to. Between the two of us, we have over 50 years of combined experience in the construction industry. And that also, again, to highlight, from building to actually owning and maintaining our units. So we think we have a pretty wide breadth of experience and knowledge in this area. One of the things that we're very proud of, we are obviously members of the London Home Builders Association, and by extension, the Ontario Home Builders and the Canadian Home Builders Association. And in the past 4 years, we have actually received twice the Innovation Award for the province for the Ontario Home Builders Award, one being a Rent Save Own program, but the second one being the Flex House. And then that's why we're very proud of these awards, but it also stimulates us to continue being trailblazers and trying new things and trying to be at the leadership of new ideas and concepts in the new home building industry.
Yeah, absolutely. You know what? I'll chime in too, because your business partner, Alan, has been friends with Derek and his dad. So I can even speak intergenerationally. There's a lot of history here. So we've got a lot of confidence, obviously, with Ironstone as well. Let's move in. And Dave, this is kind of, I think, what the people really want to see. They want to hear about the Flex House. And let's spend some time. And I've got a few slides here that I'll show as you continue on with the story. But let's tell them a little bit about the layout and the features and what this is and what they could expect to see. So maybe just to kind of tell us a little bit about the Flex House.
Sure. And I think as a basic step, just to get the first kind of wrap around the concept, we are speaking basically of a finished basement, okay, on a basic level. But a finished basement doesn't provide all the necessities you need to have an additional dwelling unit in the province, okay? So what the highlights of that is, number one, it has to have a separate entrance. So that is actually completely separated from the upper floor. And you can see that doorway there in the yellow. That basically, in our model, you basically come in at the grade level, ground level. So you're not actually going downstairs on the exterior. We feel that's an inconvenience for people. So you enter in from the side door and walk into the lower level of the apartment unit. The one that you have up on the screen is actually one of our 2-bedroom models, okay? And in our repertoire, we have 1-bedroom and 2-bedroom models, depending on the size of the home and what it's conducive for layout, okay? Continuing, there are stringent guidelines on egress windows. An egress window is just a fancy way of saying that a window can be used to escape out of a lower level in the event of an unforeseen emergency. You can see in these photos here that these windows here are actually considered egress by the Ontario Building Code, and again, allowed the tenant to escape in the event of an emergency. But the secondary part is also there are guidelines, Ontario Building, not even guidelines, but code, that you must have a certain amount of window glazing in living areas. And that's basically to stimulate a natural light into the lower level. I'm very proud to tell you that if you come to our model suite, you can actually shut off the lights in the lower level during the daytime and not be in a dark area, okay? We've created the units with our interior decorating standard, having forward-leading decoration, color selection, tiles. We have hard surface in the kitchen. I'm not trying to sell all the features of the home, but when you walk through the unit, it does come very apparent that this is a very lovely place to be able to either live or rent out. You also see down there is a lower level laundry facility for the people. So the upper level has a laundry facility, and so is the bottom. That, again, is confirming that these 2 units from the upper and the lower are completely not dependent on one another and separated. Having said that, this home, it's Flex House for a reason. So the things we've been speaking about is if you want to be a landlord in one or live in one area and rent the other. But there are also people that want to have intergenerational living conditions. And we find with a lot of new Canadians that it has become a very popular concept, which I feel will also become more popular for the entire nation, not just the new Canadians coming. And what I say that is, there is still an adjoining door at the top of the stairwell that does have, it is fire separated. It is a proper fire separated door, but it does have a deadbolt facility so that the person cannot just simply go in and out at their leisure. But if you do have parents, say, living in the lower level or upper level, and you want to be able to have quick access, you can go through the door at any given time. So those are the highlights there. I do want to key in one really important factor. Again, purchasing from a home builder. This unit is fire separated. Okay, it is constructed with a double layer fire code separation drywall between the upper and the lower. There are also fire dampers installed into the furnace that, in the event it detects any type of smoke, it basically, it has the furnace shut down to basically decrease the probability of spreading the fire through the furnace duct system. So there are a lot of small, intricate technical differences of having a finished basement and an official additional dwelling unit, but rest assured, we've got that covered.
Great. Well, and let's continue the tour with one more stop here, Dave, and that is great to go through the features. And I have to tell everybody, like you got to go see this to actually make sense, because it's not like your parents' finished basement. This is literally like walking into a condo or an upper level in a regular home. They are to the nines for sure. But Dave, so we've got the Grove in London, Ontario, and obviously, we've been saying since we started this webinar that this is a different animal. This is a different product. This is a flex house. But we also acknowledge that the buying experience has to be different as well. Maybe just shed some light on what visitors can expect to see when they come into this model house that's different than, let's just say, another model house that perhaps they're used to seeing.
That's fair. Well, I guess first, I mean, you've seen the slides beforehand. We do have fully furnished staged model. Okay, so you can see what you're buying. One of the things at Ironstone that we're very proud of is we do have kind of a slogan: what you see is what you get. And so that gives the person full comfort knowing that the floors as you see them, the pod lighting as you see them, there are no extras, there's no hidden fees. So that's just that part. But in our office, which has basically been put into the garage and converted with a very sleek office for people to come through, we do have these assets that you see on the screen here. And basically what we've done together as a collective, thanks to you, Rod and Derek, and your self-funding home model, and with Joe and RBC's partnership, we've worked collaboratively to be able to really explain to the potential homeowner how this really works. We feel that the graphics are very clean, very simple to read, and also very informative. It's not just a bunch of words and numbers. By allowing us to show the different ways that you can utilize the home. For example, on the screen, you have live upstairs, downstairs, live upstairs, rent downstairs, rent upstairs, live downstairs, or, which we don't have on this slide, but renting out the entire home. We actually show generalities of numbers of what we believe that the rent will collect and how the financing works and payments that would be required to make this work. Now, caveat, which I'm sure I'll let Joe take over later on the slides, we all understand that you do have to qualify. There's a due diligence period here. And the numbers, although they may be there, you do have to qualify for a number of other conditions. And I'll let Joe speak on that. But this allows the person to at least get an idea, to get their head wrapped around the concept. And also to say, you know what, I was hoping to live upstairs and rent the basement, but I think I could actually live downstairs after viewing our model and rent the upstairs for a lot more money, and actually creating a less burden for myself for carrying the mortgage. So I think that these assets, and also with our staff really being thoroughly trained to understand how we do this and to be able to share that knowledge, I think it provides the experience to be very clear and concise and pleasant. So I hope that explains it.
Yeah, absolutely. And I think you got a great team with Erica and Josh on site. It's only been one of those two people that are there, and they understand this model. They know how to speak to the differences and the newness that we're speaking to in this webinar, and they will tie into Joe. And you're obviously meeting Joe here today, and I think that's really good. And that's where we want to go next, because the relationship between RBC and the Flex House is unique. I'll preface it with a story, because I've with children that have bought homes and understanding that that, hey, does rental income count towards a mortgage? And I've personally sat in branches of banks and have them tell me that no, you can't count that rental income towards your mortgage qualification. But I want to just tell you that David and Joe have something to tell you about this relationship and what that means to you. But before we go there, Dave, maybe just for a few seconds, what motivated you and Ironstone to partner with RBC? What was the compelling factor that started and initiated this relationship?
Well, thanks, Rod. Again, being kind of at the forefront of this concept, I spent months, truly months, speaking to different financial institutions, both chartered credit unions and all the others, actually sources of spontaneous finance, to be honest. And I was kind of surprised that people just couldn't understand the concept, or they understood the concept, but the financial institutions just didn't have a program for it. So it was a little bit frustrating. We knew we'd get there eventually, and I was introduced to Joe, and I kind of gave Joe the concept, and he was the one that actually got it. I air quote it because I believe, or I thought it was a very simple concept, and Joe agreed that it was a simple concept, but we do have to get the banks aligned. And we did have a little bit of back and forth for sure. And the one thing I really liked about Joe, and he'll explain RBC's full advantage, but he had so many ways that RBC protected the purchaser from buying a product, not just the Flex House, but in general. And the unique way that they were able to contribute to that rental unit and how that could be a key part of the overall financing package. So to me, I was delighted that Joe was able to understand our thought and concept, and more importantly, execute and follow through on getting the program accepted. So that's why we picked RBC as a partner, and I'm delighted to see where we've gone and look forward to where we're going to go.
Great. And so attention to all of our attendees. The rental income for the Flex House counts towards your mortgage qualification. It's like adding income to your regular salary or day job's income. So I just want you to be aware of this is a first. You're seeing it firsthand here, and it is a specific advantage. Now, turning things over to Joe, Joe, there's this relationship with Ironstone and specifically with the Flex House product here. You have deep knowledge now of the product, but I want you to share and take a few minutes to share really what RBC brings to the table, because it's beyond just what I just said. Yeah, that's an important component, but I think there's some key things that first-time home buyers should be aware of that are unique for the RBC advantage. Go ahead.
Great. Thanks so much. And Dave, I appreciate the kind words, and we're certainly ecstatic to be part of the relationship with Ironstone. So thank you for that. So, as Rod indicated, RBC has, we do things a little differently, right? And depending on the duration of a new build, we can foresee these flex homes taking a little bit longer over time because they're going to start to get busy. I'm confident in that, because I think that the concept of being able to use the rental income in the basement to qualify in addition to the client additional income is a first, and it's going to really start to take off. So what we do at the bank, to just kind of quick high level, is, we talked about it briefly. We go through the full application process, and I will leave you with a simple line here. Not all pre-approvals are equal. Okay, so I'll say that one more time. Not all pre-approvals are equal. That's what we do at the bank. When we go through an actual pre-approval, we've gone through the full steps of approving a client for X financing, because we pulled a credit check and we've gathered up all their income, and it's been vetted through our credit department. So that to me is kind of like the first step. Once that happens, the client gets a letter, and then the client then can go out there and shop with confidence. So let's use the Flex House as the prime example. The Flex House might take 12 months to build because they're super busy. Once RBC holds an approval in place, we've done all the due diligence. The appraisal's already been done in these properties, folks, because RBC's already done a blanket appraisal on these 3 units, the 3 units of the Grove. So there's no appraisal that needs to be done at the end. We do the appraisal based on the floor plans and layouts, which our department in Toronto already has that information. Once we actually give the client an approval, that deal's done. That's called our firm approval. It's kind of like a golden ticket. So the client can be rest assured that deal is going to close in 8, 10, 12, 16, whatever months it's going to take for this to build. And the beauty of it is there's a lot that can change between today and 6 months or 12 months. Clients change jobs. Okay. Clients go on maternity or paternity leave. So, that impacts their cash flow. And not to mention the housing market, which we once again have no line of sight as to what the value of homes are going to be in 12, 18, 2 years. I have no idea. We've already done the appraisal based on the floor plans of the property. So we don't revisit any of that. We don't pull a credit check again, and we don't ask clients for additional income. So that in itself can really put a lot of clients' mind at ease, because if something changes in their personal life, which could be a positive, we don't want that to impact their ability to move into this home. So, as I mentioned earlier, RBC, we differentiate ourselves with advice. We've got great partners that we work with, and, we're here to help clients not just kind of get a mortgage, but also just find a home with their dreams so they can stay in that home and rest assured, their finances are put in order so that they're not going to run into any cash flow problems.
All right. And then let's walk through. Now, David kind of showed us what happens at the model. We got some financial examples and all that. Let's walk them through, Joe, with your guidance of basically some general, for examples of what it takes and what a mortgage payment looks like. And I've got the four scenarios you sent to me. And so maybe to start with number one here, and we'll just work through them.
So scenario one is basically a client buys a flex home and they choose to live in the entire home themselves. That's option one. That's a pretty standard transaction. That's what majority of clients have been doing over the past several years. Can we go to scenario two, Rod? Scenario two basically talks about the client living in the top floor and renting out the basement, which is the ADU, the accessory dwelling unit. So RBC is already factored in to the market rent that we can use on that basement dwelling. No questions asked. So that income is being added to the client's cash flow, and it's offsetting the mortgage payment based on a 20% down payment. And once again, we use 20% down payment just in case if clients want to use this as an investment property. But we could certainly adjust it if clients were going to put less than 20 down. So each situation might be a little bit varied. But for the most part, is that dwelling unit in the basement is now supplementing the mortgage. So you can look at that right there. Now it's costing the client just under $1,200 to live there, right? So if you think about the costs associated, the average rent in Southwestern Ontario, for that matter, is much higher than what that number is. So we're using the word affordability. Scenario two clearly shows a lot of affordability for the consumers today. Scenario number three, which is, hey, I think I may want to rent the upstairs because I love the basement dwelling. And I'm going to be honest with you, folks. If you haven't seen this flex house, reach out to either Rod, myself, or Dave. We'll get you connected with Erica and Josh, and you can go through a tour. They are spectacular. The basement dwelling is not your typical basement. It is an actual furnished unit that looks like a high-end condo. So scenario three is, hey, you know what? I don't really need the first and second floor. I want to live in the basement because it's perfect for me. The average rent that we've used on there is about $2,900, right? So that rent now becomes very, very affordable for the client to live in the basement. When I use the word basement, it's more of like a basement apartment for that matter. The cash flow becomes far more advantageous to a client. So we're getting back to that affordability, okay? Then you look at scenario number four, which could really be a true investment property. Your cash flow is positive. And that cash flow positive now is being allocated towards covering your insurance or covering the taxes and just having a slush fund for any additional costs that you may have for repairs or upgrades or whatever the case may be. So there's four different scenarios, and there's four different options for clients that three of them benefit the client specifically from the rental units. And this is, once again, this is unique. It's innovative, hence the reason why Ironstone's won, 2 innovation awards in the home builder space, which is fantastic. So these three options are fantastic, and Royal Bank's got a program to facilitate these.
Yeah, well, that's great. Thank you very much, Joe. And I hope that the impact is seen and heard loud and clear here, because I know that when we speak to people about this, when they see this kind of difference between living and buying a conventional home and the impact of either upstairs or downstairs rent. And what that does, all of a sudden the eyeballs get large. And I think that's the point that you really want to take away with you here through this webinar. But you know what? Let's put these things together. You know, we talked about, and Joe introduced us to this whole idea of the 4 steps: the dream, the finances, the options, and then it's time to actually look at buying. And you know what? The whole idea of buying, here we are, we're talking about the flex house. We got the process, we got the finances, but typically, if this was any other historical home build, go buy it, whatever, the relationship would essentially be done. You would sign on the dotted line and wait for the house to be finished, and you move in, and it's all in your hands. But we realized that we're talking about something different here. We're talking about a different mindset. We're talking about a different financial opportunity here. We're talking about being a landlord. We're talking about, hey, treat that home as a business. But we also realize, we're smart enough to realize that maybe we ought to hold the hand of the buyer through this process and give them guidance, give them access to resources so they don't feel like they have to go it alone. And I hope that's the impression you'll get here in a few short minutes, because, you know, this whole concept of these 4 key steps that, you know, we started off by saying this is going to form the foundation of what we're going to do. What we do want to introduce is the idea of it doesn't end at the stage of purchasing. You know, yes, we talked about the dream. We've got the book that's going to give you the mindset and introduce you to the self-funding house concept, which the Flex House has implemented to a T. Very, very important that you rekindle that dream. Home ownership is possible today. It just takes a different mindset and a different opportunity. Finances, and we're not talking about the financing. We'll talk about that next, but finances. If you want to talk about budgeting and what does it mean to be a landlord and all that, go check out the online learning portal, because there are budgeting tools that you can download and use right there to help get a picture of where you are, so you then can look at the application of the Flex House's opportunity, because that's what the option is. The option is looking at this RBC Flex House partnership and what it can mean. You just saw the examples from Joe, just as an example. Now it's time to create your example, the real world example for your circumstances, your income, your dreams, your house that you want to have. And that's what it's all about. And then, you know, the whole idea of buying. Now, Dave covered it really, really well. What is the advantage of buying a house with an ADU or a basement apartment completed during construction? Because there are definitely advantages. Now, maybe somebody online here already has a house, and maybe just looking at a way of making it affordable, keep the house, or maybe you're upsizing or downsizing. It is possible to renovate, but we're not going to go into that here. We've got book number 2. I know the Ken Beacon Dam, the actual co-author that helped us, he's online here with us too. But you know what? There are options there as well. But you know what? We're focused on new construction because, number one, it's a great opportunity to be balanced with RBC, because financing is very, very important. But now here's the kicker. Here's what happens to you as a Flex House buyer. That once you buy, we continue on with the community, meaning that we bring the community of Flex House owners together on a quarterly basis. We run quarterly webinars so that you can hear from, you know, Bob and Mary, who just got their first renter. What did they do well? What didn't they do well? Maybe you got Q&A. You want to ask some questions of a landlord tenant expert that we bring on as a guest speaker. The key here is, I want you to see that if you look at every single step along the way, there's guidance, there's tools, there's advice, and there's access to experts beyond just the 3 of us, right? This is all about giving you an opportunity to tap into something that is extraordinary and very, very different. We call this a very unique buying experience, and we want you to tap into it. One last poll. We're going to change the topic here real quick. London, Ontario. Does that real estate appeal? Would you buy in the London market? Maybe you could just take 10 seconds and just tell us a little bit of a yes, no. Is London where you're at? Is London where you want to go? Is London a place that you might potentially want to invest in as maybe option number 4? There's all sorts of different things. And I have a feeling, you know, we can just see an overwhelming yes. And I can see that from personal experience, even in the apartment industry. Southwestern Ontario is a very, very hopping market, from rental, from new construction to job opportunities to geographical location. And I think it's overwhelmingly yes there, David and Joe, you're seeing that right there. Let's close up that. Thank you for sharing some insight from all of our participants. We're in the home stretch here in the last 8 or 9 minutes. And I want to take advantage of some of the expertise that both Dave and Joe have by asking them a few questions, because housing market. Dave, you mentioned it earlier. There were challenges you were faced in implementing and for the first time bringing the flex house type of technology to the London marketplace. Maybe you can just tell us a little bit about, in general, the challenges in the market from both the developer builder's perspective and the buyer's perspective. What's your take on the challenges that need to be resolved or that you think are resolved?
Well, I think that the challenges are certainly still there. I believe that this has got to be a fully collaborative approach to solving this. Just as a point, case in point, like even with having a financial partner, and thank goodness that RBC's come to the table to help us out. But this has to be a concept that has to be adopted by the entire nation at all different levels, both public and private sectors. Okay. The fact is that we do have a shortage of homes. Our immigration policy is still very robust. It's not going to go away. We need to provide housing. And I would love to sell each and every single person today that's here a home in London. But I think the bigger picture is that this is a very simple solution. The ADU, the lower level basement apartment or the granny suite in the back, we need to change our thought process. We need to start getting into this. This was a very common approach in Toronto. And I know Derek Lobo loves to tell the story that, his first home, this is exactly what he did. He bought a multiple, I don't know if it was a duplex or a triplex, where he lived in one unit, rented the other. And as his family grew, he basically took over the home. That was not a very common theory in London, Ontario. London, Ontario is always a very affordable city to purchase a home in. And much like the rest of the country, prices have escalated very quickly, and the population has. And just further on your point about London, Ontario, as you know, we have one of the highest per capita purpose-built rental areas in the country. And you named a bunch of reasons why, jobs and some other things, but also we have a university and college that has a ton of kids that come here. Over 50,000, I believe, is the number. And with that, the spin-off jobs. We have a new factory coming in with the battery plant in St. Thomas. That's also, so what I'm saying is the news is great, and it's going to be even better. And we all have to shift our thought into not just talking about the fact that we need houses, but do something about it. And I think that the province has started with it. I think municipalities have to get on board and get a little bit quicker on adopting these approaches and making it simpler for everyone to get these permits, construct them quickly, get approved, and get people living in them, quite frankly. So I think in a nutshell, it's everyone's problem. But with problems come opportunities. And I think this opportunity that we have here today is very unique in London, but I think if we do our job properly, it won't be unique, and it shouldn't be, and it should be adopted across the country.
Yeah, absolutely. Well, and Joe, we're in interesting times. When the calendar turned into 24, all of a sudden there was a different climate of interest rates perhaps plateauing. Now we're even hearing of potential timelines of little nudges downwards. But with lower house prices today and higher interest rates, we probably see a change in trajectory coming. What advice could you give from a financial perspective to potential home buyers so they get an understanding of what does it mean when interest rates change, and what does it mean to house prices when interest rate changes, and when is the best time perhaps to buy, and what are the things to think of?
Yeah, for sure. So it's a great point, Rod, because there's a lot of clients that I'm dealing with, as well as other individuals in my business, where we have a lot of clients sitting on the sidelines that are pre-approved to buy. And I would say probably about 70 to 80% of them are sitting and waiting for one thing to happen, and that's for rates to drop. So I can do an analysis with a client. So today rates are here and housing markets are here. Now, from what I'm hearing, we're not expecting the housing prices to come down. We're not completely flat, but it's a buyer's market now. It's definitely not a seller's market. So if a client were to go buy a home today, with the rates being today, and they pay fair market value, this is what they're going to get. What happens traditionally, and this is kind of a cycle in my 30 some odd years in the banking industry, I've seen this ebbs and flow, is when rates drop, typically what happens is the value of the homes start to go up. And the reason being is you've got all these individuals sitting on the sideline that are waiting to get out there in the market. And that half a point on a fixed rate or whatever the case may be, that may be enough motivation for them to say, I'm going to get out there in the market. I'm going to start looking. Because right now, if there's a house listed for sale, it may sit there for 4 to 5 months, and there may only be 5 or 6 people going through the home. When rates drop, that's when we're going to get back to it may be more of a seller's market. So now that home that a client paid for today might be worth, or the client may have to spend 15% more for no reason, because that's what the market's dictating. So I always tell clients, if your motivation is you really want to buy because you don't want to rent, and your cash flow is okay, and the numbers work for you, today's a good time to buy. Because in a year from now, a year and a half, that home you bought today for, pick a number, 700, 750, that could automatically be worth $80,000 or $90,000 more by nothing happening except the market's driving the values up because you got more people out there in the market. So from my perspective, when I run those analysis and those scenarios, 100% of the clients are saying, I didn't look at it that way, because the difference in the payment is not very much, but the value of the home, they may end up paying more than what it's worth. And that's where your appreciation level may not get to where you want it to be versus buying today. That appreciation level is going to happen on its own. So hopefully that kind of gives you a little bit of insight, Rod, as to kind of where we see the market and where we see opportunities. So I think, now is probably a good time to explore the option of, I always ask clients, like, on a scale of 1 to 10, what's your motivation to move from renting and home buying? And they say, 8 or 9, but I want to wait for X. Well, those 8 or 9 should be looking today. Because chances are,
I think that it's valuable insight, because that's not something the typical person will glean from media. That's a great tip. Now, we got 2 minutes here, and Dave, maybe you can just share for 1 minute. I'd love, from a developer's perspective, you kind of touched on it a little bit here a few minutes ago, but what would your message be to other Canadian house builders based on your experience? I mean, you obviously are very passionate about solving this crisis. You're not just trying to sell houses, you're actually trying to make a difference too. Any parting words that you'd love to share with other peers in the development industry?
I'm very proud of our industry, and when we have a challenge, we have enough motivation to try to solve it. My message would be is that we all have to, again, work collectively together, make the process easier so we can get these things built faster and get people moved into the units. So for as I've spoken to some of my people, my associates in the industry, they have had some challenges. They're concerned a little bit about process. And my message is, don't be afraid. You have to get through one and figure it out, and it will get better. And we have to be tenacious and keep at it. And I do believe it is starting to happen. And I know we will be successful to meet the housing needs of all Canadians.
Yeah, no, very, very, very important. I respect your opinion, because you're a well-respected developer, and I love that you look at the bigger picture of our entire country, because it's very, very important. And you know what? Let's wrap, because we're right on target here. And let's just talk about what are some actionable steps that our participants here can actually take. Number one, like I said a few times, more than once, rekindle that dream. I encourage you, grab a hold of that book. In fact, that book is ready and waiting for you when you visit the Grove. So, and if not, just get on Amazon, pop it. It's literally an hour to an hour and 15-minute read. Rekindle the dream, because your finances deserve your dream to becoming your reality. Check out the selffundinghousebook.com. If you want more information about that in the book, great. The flexhouse.ca is where you can find everything about what you've heard about, and instructions on how to get there, the agents to meet at the model house. All that information is right there, because we want you to go visit the Grove in London, Ontario, whether you live in London or not. I mean, remember, we had 4 different options, so this could be everything from investment all the way to just buying for yourself. And lastly, get connected. As we said earlier, we've got a QR code here that you can actually just scan, take a picture of that. We put in the email addresses for the 3 of us, as well as the URL for this. And there you can ask any questions you like. You can connect with us one-on-one, and that way you can be sure to get the answers to the questions that are personal, and you can get it relative to your specific circumstances. And personally, I just want to thank Dave and Joe just for spending the time with us, having the expertise of you guys, and piloting this project in London is I think we'll remember this. We'll remember this as the start of something that really changed and impacted the crisis that we've experienced here over the last year or two, and even well before that happened. And I believe that affordability and homeownership is here. Again, thank you very much. And to all of our participants here, we thank you for joining us. You'll have access to this recording as well. And you haven't heard the last of the Flex House. You certainly haven't heard the last of the Self-Funding House, and the RBC. And coupled with all of this is a great opportunity for making your future become your reality. So thanks, Joe. Thanks, David. Everybody have a great afternoon. Thank you very much.
Thank you guys. Have a good day.